Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, September the 16th. Well, the grain and oilseed markets got a shot in the arm this week on Monday, with USDA lowering both corn and soybean production and U.S. ending stocks. However, the approaching harvest and struggling outside markets weighed on prices all week and saw Monday's gains fade away. Inflation continues to be an issue, and fears that the Fed Reserve will push interest rates even higher is overshadowing all of the markets. Economies are slowing, and fears of a recession are growing stronger. Our November canola contract did manage a gain this week, though. It was up $22.70 a ton, closing out at $792.50. The canola, well, it followed the U.S. soy complex higher on Monday and then found support from higher palm and soybean oil to finish the week on a positive note. The Stats Canada lowered this year's production estimate by 400,000 tons, which supported the move higher. The November soybean contract was up as well this week. It was up 37 cents a bushel. It closed out at $14.49. The December corn contract, well, it was down this week. It lost 8 cents a bushel and closed at $6.77. The December oat contract, well, it managed to squeak out a gain this week. It was up just 3 cents a bushel, but closed at $3.96. And our December Minneapolis wheat contract was up 11 cents on the week and closed at $9.39. The wheat prices crept higher this week, but they did struggle to get above that $9.45 area. Keeping a lid on prices is the stronger U.S. dollar, which makes U.S. wheat uncompetitive on the world stage. The winter wheat planting that is proceeding on schedule despite the dry concerns in the southern plains and the nervousness about the direction of the economy. Our Canadian dollar this week, well, it was down 148 basis points and closed at 75.25. Leading it the way down was crude oil. Crude oil lost $1.72 a barrel this week, and it closed at 85.07. For next week, well, the trend is down for most crops, and the recent bounces are providing some last-minute pricing opportunities as the Canadian harvest rolls along. The canola, well, it has struggled to stay above that $800 area, so that may prove tough to overcome. And we'll be looking for prices to resume the downtrend and to slip towards that $740 area. And wheat, well, wheat is traded in that $885 to $945 range for the last couple of months. We'll look for that to continue trading in this range and expect that it'll now slip down towards the lower level of the range at $8.85. There are some cash prices of $11 to $11.50 out there still being quoted and do provide an opportunity for a sale if you need some bin space. I'm Ed Baldwin with your weekly wrap-up for Friday, September the 16th.